Hi guys, welcome back to my channel, Kelvin here. So ever since the beginning of 2021, meme stocks have been gaining popularity, with the most famous example being apes from Wall Street bets coming together to squeeze the squeeze the shorts of hedge funds, causing GameStop to go sky high. And after that was AMC, BlackBerry, Wish, Bed Bath & Beyond to name a few. Some people have become super rich from this whole saga, others have lost their life savings. In fact, meme investing became so popular that new ETFs were created just for meme stocks. So in this video, I will look into meme investing. Specifically, is meme investing actually profitable? What are the meme stocks' average returns? And how are their returns compared to non-meme stocks? Are meme ETFs good? And more importantly, should you invest in meme stocks or meme ETFs to what big? Before I start, I would greatly appreciate it if you can help to tap the like button. In return, I will show you a dancing dog. Alright, let's start right now. So, just in case you're blur, what's a meme stock? Basically, a meme stock is a stock that gained popularity among retail investors through social media like Wall Street bets. Occasionally, they will discuss about certain stocks so much until there's a lot of hypes around the stocks, which can lead to more people buying the stocks and sometimes even sending the stocks to the moon. This is super effective because some forums like Wall Street bets have around 11 million users. That's like 2 times of Singapore population. Just imagine 11 million people be like apes together strong and buy the stocks, it will definitely send the stocks super high, right? Okay, here's the real question. Is meme investing profitable? On Reddit, there's a guy called Nobjobs who answered this question. He analyzed comments on Wall Street bets in 2021 to find out whether you should pay attention to their stock picks. By the way, here's how he found the top Wall Street bet stocks. Basically, every day, there are a lot of people talking about different stocks, right? There are tools which you can use to see which are the most talked about stocks for the day. For example, this is market sentiment. Here, you can see that in the past 1 month, S&P 500 was mentioned the most. Second, GameStop. Another website is Swaggy Stocks. Here, you can see that in the past 1 week, Apple is mentioned the most, Tesla second, GameStop third. He found that among the top 10 lists, most of the stocks actually gave positive returns, except for BlackBerry, Clover Health, and Context Logic. You will notice that in this list, GameStop and AMC gave super duper high returns. Why? Because these stocks were actually shorted by hedge funds and retail investors were able to pump up the stock so high until it created a short squeeze. So that's why GameStop and AMC can give such high returns. All the rest were just normal pumps. If you are hardcore and have bought these stocks at the right time, GameStop and AMC will give the highest returns, but all the rest still gave really high returns. Like if you bought BlackBerry on 20th January, you will still have gotten 96% returns in just a week. However, if you have tried to YOLO in but bought at the wrong time, you will have easily lost more than half your money. Overall to date, the top 10 Wall Street bet stocks actually outperformed the S&P 500 by over 6%. And if you only invested in the number 1 Wall Street bet stock, you will have outperformed the S&P 500 by almost 20%, which is actually expected because of high risk, high reward. However, here's the problem with meme stocks. In most cases, they are fundamentally bad. For example, this is GameStop. You can see that from 2017, the revenue has been going down, income going down. Same for AMC. The revenue going down, income going down, debt going up. Yes, I know that GameStop is planning to change its sales strategy, or AMC going into the NFT business. One of you told me to leave GameStop alone. Whether all of this will work out or not, we'll just have to see. But for now, meme stocks are usually fundamentally bad. Because of that, the meme stocks stock price will have very similar patterns. For example, this is GameStop chart. At the start, everyone be like, buy! This stock is pumped up very high. Then, because there's nothing to support the price, everyone be like, sell! They will paper hands, take profits, and the stock price will just slowly decline. Same thing for AMC. Pump up, then slow decline. BlackBerry, huge pump, slow decline. Wish chart, pump up, slow decline. You get the idea. So, because of this, it is very hard to invest in meme stocks because you need to get 3 things right. Find the right stock, buy at the right time, then sell at the right time. For example, GameStop, you buy here, then sell here. Oh, you hot big liao. But if you buy here, congrats, you just became a long-term shareholder or a bag holder. Compare that to buying fundamentally good stocks. You only need to get 1 thing right. You just need to find good stocks and the timing is not so important. Like Nvidia, you buy here, it doesn't matter. As long as you hold long term, you're almost guaranteed to make money. Same thing for Apple, buy here, or buy when Steve Jobs passed away. Meh, it's a good fruits company making stuff for the Apple fanboys. Just buy and hold and you'll be alright. In fact, the longer you hold, the more the stock will go up because the company is always innovating and coming up with new stuff. Again, let's look at some data. Here, you will see a lot of lines, but don't scared, I will explain it to you. Here, I'm comparing the top 10 Wall Street bet stocks like GameStop, AMC against the top 10 holdings in S&P 500 like Apple, Microsoft, Amazon, and so on. The comparison starts from beginning of 2021 because 2021 is where a lot of these meme stocks appear, right? Okay, two stocks gave the highest returns, AMC and GME. Like I said just now, it's not surprising because these two stocks had a short squeeze. But if you ignore these two stocks, you will see something interesting. Most of the stocks that are performing well are not meme stocks, like Nvidia, Google, Microsoft, and the worst performing stocks are meme stocks like Palantir, Clovis, Wish. And if I change the comparison to 5 years, wow, okay, Tesla is abnormal because it gave WTF returns in 2020. So let's ignore that. The results are mostly the same. The best performing stocks are the top stocks in S&P 500 and the worst performing stocks are meme stocks. What about since 1993? You can see very clearly, good stocks will give highest returns over the long term because stonks. So the data shows it very clearly. In the short term, meme stocks have the potential to outperform S&P 500 or even good stocks. But over the long term, good stocks will always win. It's like Paul Betrol, right? This guy is the bad guy. He will do bad stuff. But eventually, the dogs will always win. True story. But obviously, this advice is not good enough, right? Otherwise, why the investing sub only has 2 million members while Wall Street Bets has 11 million members? Because everyone wants to what big Ain't nobody got time to wait 4 years for Tesla to give 300% returns. We want 800% return in 1 week But at the same time, we are not fucker and cannot time the market properly. How? So remember the meme ETFs that I told you guys about? Maybe that's the answer to getting good returns in the meme stocks. As you all know, an ETF has a few benefits, right? First, it has a lot of stocks, meaning it's very well diversified. Even if a few stocks does badly, it's still alright. As long as you have 1 or 2 godlike stocks like AMC and GME, the ETF should theoretically give good results. Second, the ETF will auto-rebalance itself. So let's say the stock does badly, the ETF will just kick out the bad stock and replace with a good stock. Like how the top stocks in S&P 500 last time were oil companies, but now they are tech companies. This means theoretically, you just have to buy the ETF, play some Animal Crossing, and wait for the ETF to what big. Here are the 4 ETFs, BUZZ, SFYF, MEME, and FOMO. The way each ETF chooses their holdings is a bit different. For example, BUZZ and MEME ETF choose based on social mentions, like the Swaggy website that I mentioned just now. SFYF hosts the 50 most popular stocks held by Sophie account holders. And FOMO is actively managed, meaning the fund manager will try to choose stocks that he thinks will reflect current or emerging investment trends. So are these ETFs good? Personally, I'm quite skeptical because first, these ETFs don't rebalance fast enough. This rebalance monthly, this rebalance every 2 weeks, this rebalance every week. Meanwhile, the popularity of each meme stocks will change super fast. By the time you rebalance, too late lor, GG lor. You might be buying at the top and becoming a bad holder. Also, remember how meme stocks have a pump and decline pattern? To get a good return, you need to buy at the correct time, then sell at the correct time. These ETFs will be too slow to react, aka too slow to panic buy and panic sell. Second, these ETFs have too many stocks. Remember how the top stock gave the best returns? The more stocks you have in an ETF, the lower returns you will get. For example, BUZZ ETF has 75 stocks, SFYF has 50 stocks, FOMO ETF has 58 stocks, only MEME ETF has 25 stocks. But because MEME ETF has a minimum market cap for the stocks to be included, it won't capture a lot of potential meme stocks, which are much easier to pump. Just in case you're wondering about the performance, there's nothing much to show because the ETFs are still quite new. But I suspect that all these ETFs will underperform the S&P 500 over the long term, simply because meme stocks is a short-term play. Invest in individual meme stocks also bad, invest in meme ETF also bad. How? GG lor? Here's my take. If you look at the richest people in the world, none of them are traders. All of them became rich by playing the long-term game. Let's say you managed to get 800% returns from GameStop this year. Yay! But I bet you can't continue getting such high returns every single year. And also, just remember this. Everyone is a genius in a bull market. When there's nothing fundamentally good supporting the price will just decline, especially when the crash comes. But on the other hand, if you're buying good stocks and if a crash comes, meh, you just buy more nia. So my advice is stop looking for the next meme stocks. Invest in good stocks and eventually you will quite big. Anyway, that's all for today. Are you investing in meme stocks? How are your returns? Let me know down below. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.